You know what? I do got the secret. I do got the cheat code. I know exactly what will make you profitable in the next week. You just gotta listen up. All right. Now I don't have the secret. I don't have the cheat code, but I have a blueprint. And it's a blueprint that I've been using for the last year. And this is the blueprint that has made me the most confident trading and looking for the daily bias, specifically daily bias and the framework in the 1 hour, 30 minute, 15 minute, all that. Now, before we go down, or before we go into the trade that I took on Friday, this massive candle right here, I want to show you the framework behind it. And it is, if you look into these specific swing points in the market, if you see this one right here, the minute it got traded into, look at the reaction. Look how big the reaction was away from it. And why? Because this is a relevant swing. It's a swing that is separated from the next swing, which is all the way down here. So that means that the reason why the market didn't react the way it reacted when it took this liquidity, it didn't do it here or here, was because there's more liquidity under this low than any of these lows right here. Yeah, it gave you a reaction, which is normal because of the face of price, right? We span, consolidate, and then we span again. Or we span, retrace, and go. Whenever these swing points were hit, it gave you a retracement back up. Now it could have leave the range, but it didn't. And once it doesn't, the next swing point that you got to look for is the one below it, which is this one. This one was pretty relevant. And then we did get a face of price right here, which was consolidation, and then we came down again, and then we took the most relevant swing point in this whole range, which was this one. You can see, based on the reaction that we got the following week. Now, swing points, the reason why I say swing points are very important in price is because if a price doesn't reverse from the swing point, it's most likely that it's going to continue to seek for the other swing point in price. If it didn't retrace here, this is S&T by the way. If it didn't reverse here, it will most likely come to this high. If it doesn't here, then this high. Obviously, we all know the reason why gaps in the daily time frame, especially, they work is because there's a swing, a relevant swing between this high and this high. That's why the gaps work. Now, if we go to the recent trade, which was Friday after FOMC, you can see that all these lows are still remaining. Then came FOMC, took all these lows, but left this swing low and this swing low. Now, I was expecting price to leave the range because of the volatility the FOMC brought into the market on this day right here. Look how large the range is. But it didn't. We have a S&T on these highs with ES. Nasdaq didn't get to trade above it, but ES did. So that gives it a divergence, S&T. Now, when we come into the next day, which is Friday, right here, we can see how it opened. We opened with a gap, significant gap. See, price closed here on Thursday, and then Friday opened all the way down here. On Friday, well, if I'm going to trade it lower, I'm going to trade it lower to this low, which is a very high chance that it will come to this low. Or if it continues, I'm aiming for the range low. If you go down to the 30-minute, you can already see the same thing being applied here. You have the open right here. The open immediately traded below this manipulation right here, which made the SMT. Consolidation until price, what time is this? 1 a.m. There's the open of London. So it's significant timing price. It came up, took this high, which is relevant compared to that high. See, there's a large distance between these two, especially when price goes and only gives it a tiny move a lot above it, and then it places down like this with strength, with a lot of strength down. And this right here is what confirms my framework, my idea, my daily bias to trade it lower to the previous day low. It's right here. This low, this low being traded below 2 and closed, and then this move right here. This gave me a lot of confidence to look for shorts on New York. The reason why is because, as you remember, price spans, consolidate, and then go, right? It's the same thing that we have here. Price manipulates this high, and then right before New York section, it consolidates. It creates a small range. Now, when you have a small range like this, all you want to see is the range being traded above it, right? Being traded above it, create manipulation. How do you know what's a manipulation? Well, you see the leg going up, and then you see the other leg going down fast. So fast move up, fast move down. That is a manipulation. The closer, right here, the close, even more indication the price wants to go lower. If we go down to the execution time frame, which was the 5-minute for me, we have the exact same thing again. See, in the daily time frame, we traded above the range, right? Going to the low of the range. In the 30-minute, you go. We traded above the range, immediately traded down. The mini range right here before New York section, a range, traded above it, immediately turn it around. In the 5-minute, you see the same thing. It's the same thing right here, but in the lower time frame. 30-minute candle, flipped. In the 5-minute, you can see with more details now. A big range. See, there's no direction here. The market is still in the same spot, right here. Just trading right here in the same spot. So when we get this manipulation right here, the only thing I'm waiting for is for another block to be formed. So I can aim to previous day low. The other bug that we got was right here, 9:30, 9:30, 9:35. Created this up close candles right here, this series of up close candles. 9:45, 9:40 gives you a very large candle closing below the two candles going up. So this immediately tells me the price wants to go down, especially here. We got the manipulation. This close below here confirms the down move. All I'm waiting for is my entry confirmation. For other people, it can be for value gap. It can be I don't know what's it called. The inverse. It can be. I think it's a breaker. I think this is a breaker right here. I don't know. Anyways, all I'm waiting for is to enter after the auto block is created. Stop loss above this string high. Put it right here. I don't know why. And then aiming for 1 to 2 first. So I aim for 1 to 2. So I took position off on this candle when it hit 1 to 2. And then I took more right here. And then I closed right here on the closure of this candle. Thought it was going to turn around. But yeah, thus was my trade on Friday. All I do is literally look for the same thing in all time frames. The daily time frame, I look for price to trade into significant levels. Significant levels by, what I mean by this is this swing low is very far away from this low, so that makes it significant. So when price comes into it, you see this candle tells you that it's rejecting this low. Therefore, you look for the next day to trade away from it, right? Right here, again, so information, this candle closed bullish, closed back in the range, the next candle continues. This candle closed very strong, indicating strength to the upside. This candle traded again away. S&T right here. Look at this candle. Again, S&T right here. Now look at this candle. And look at the continuation to this low. So price is always moving away from significant levels. That's something that you should be focusing on, so you can stop pattern trading and getting all mixed up in this. Like this was definitely not worth it, unless you have like a very easy strategy to navigate this. Mine doesn't, so I avoided it. This is complete trash. This is goodness. Anyway, most out.